All right, time to do another current metals update. I'm going to start with the currencies though. Um, I was concerned that the ECB had maybe or was going to intervene heavily in the currency markets and prevent the normal rally out of a daily cycle low, and that's exactly what they did. This cycle has topped on day two. Uh, Obviously, there's no scenario where a cycle ever tops on day two. Cycles are driven by sentiment. In order for a cycle to top, then you have to generate enough um, bullish sentiment to run out of buyers, and then it rolls over, and that's just never going to happen naturally on day two. Um, I've been saying this for years, and it's the reason I don't trade currency markets. They're just the most heavily manipulated markets on the planet, and at this point, it's I have to even wonder why there's um, tradable currency markets. They're just being ripped back and forth by central bank interventions. And I think finally metals traders have come to realize that the dollar chart doesn't really mean anything. If the dollar is going up, it doesn't mean the dollar is stronger necessarily. It just means the ECB is winning the currency battle at the moment, and they are at this point with today's drop and break of this support zone right here. It's clear that the ECB did uh, manage to roll the cycle over on day two. And again, that's not something that would ever happen naturally. All right, moving on to the metals. All right, so even though the dollar is rallying, like I said, I think metal traders have finally come to realize that the dollar chart really doesn't mean anything, and at that point, gold can rally along with the dollar, or at least go sideways as the dollar rallies, and that's kind of what's been happening here as the dollar bottomed back in here and has been going up, and gold has for the most part just ignored it and has been going sideways. And even though we got a fairly strong rally in the dollar this morning, gold has reversed the uh, early morning attack. And what I would like to see now is another close above this resistance zone at 430. Let's call it 434. Let me widen the chart. All right, you can see that 434. This basically is the last resistance zone right here before we hit an air gap, and then the next resistance is going to come in somewhere between 1520 and 1550, let's call it, right in here. Um, you can see for the last, well, this is going to be the fifth week, gold has been pushing against this resistance zone, and I think it's bullish that it hasn't just reversed and started down into a clear intermediate decline. It keeps knocking on this resistance zone week after week, and I think that's a bullish sign, and I think it's going to be resolved eventually with a breakout to the upside. Probably, I would guess, after the FOMC meeting, after they cut 25 basis points, which may disappoint the stock market. And if it does, then that's going to demand that the Fed is going to have to cut again. And I think gold will anticipate that and break through this, even if the Fed does disappoint with only a 25-point basis cut. I think the stock market will react badly, and that will guarantee more cuts to come in the future. And I think gold will uh, go ahead and break through this resistance zone, maybe on or slightly after the FOMC meeting next week. The real winner here, I believe, is going to be silver. It's been suppressed for years now. Every time it gets above this 200-week moving average, the bullion banks come in and smash it back down. Don't think they're going to be able to do that this time. We've got a very powerful impulsive move to come up and test the moving average last week. It did close below it on Friday, but we're again above it We held above it yesterday, and we're getting some more follow through today. Um, I'm going to go out on a limb and say that this time the banks are not going to be able to keep silver below this 200-week moving average, and we're finally going to get a sustained move above the 200. And I don't think it's completely out of the question. I mean, the gold has already gone above the baby bull high, and the miners are not far from testing the baby bull high. I don't think it's completely out of the question that silver starts to ramp up violently here in the next month or so, and also test the baby bull high, which is right here at $21. It seems, um, like a big stretch at right now, but I think this market has been suppressed for so long that this is just a rocket ship on the launching pad, ready to go. And I also think there's at least one big bullion bank that is caught in a short squeeze in silver, just like I think there was one caught in the gold market as well, and that could be the fuel for a really big move in silver over the next 4 to 8 weeks. And I don't think it's completely out of the question that we could test this resistance zone here at a little over $21 during that time frame.